And we'll also take a look at mining in Zambia. And this is one of the major issues that the Zambian correspondent Arthur Davies Sikopo just focused on in just a moment. But a big focus on the gold price today. As mentioned earlier, the gold price soared to a record high, surpassing $5,100 per ounce, as this is the central banks and investors turned to safe haven assets. You will understand, due to the unstable geopolitical tensions and the volatility in the market. The surge in gold, along with other precious metals like platinum, contributed to roughly 14% gain for the rand against the US dollar. This is last year, and an additional 3% increase so far this year. For more on this, we joined on the line by Peter Major, Director of Mining at Modern Corporate Solutions. Peter, welcome to African Business. Good to have you with us.
Thank you very much. It's always fun being with you people.
Oh, it certainly always is, and very fun when we look at these surging gold prices. Could you talk us through the various aspects and the various factors that are driving gold prices to this historic level?
Well, without sounding too boring, you've probably heard the expression, a perfect storm. And that's when lots of important factors come together and they cause an event to be much larger, much more important than normal. And that's what we've got. The gold price, the silver price, and even the PGM prices, even copper and tin. We've got what we call a perfect storm. The perfect storm is you've got a very powerful president in a very powerful country that's changing the way nations have operated since World War II. So no one's quite sure what the new order is going to look like. But a lot of what we're hearing and seeing is we have to have enough resources to take care of ourselves. We can't rely on other countries. So that's all of a sudden creating a big squeeze in resources. All countries realize we have to grab our own. We can't depend on other countries. Now, it also turns out Mr. Trump thinks America needs low interest rates. And America has a pretty good history of central bankers that know how to manage interest rates. But Mr. Trump is pretty sure he knows more than the central bankers, and he really wants someone in there to do exactly what he wants. He wants lower interest rates. Now, it's nice to have low interest rates, much better than high rates. But the market determines the interest rates, not the president, not even the central banker. He might be able to control short-term rates like printing cash, but the long-term rates are set by the world. So if Mr. Trump is going to print a whole bunch of money just to get America out of its current financial deficit, the currency is going to get even weaker. And people don't want to hold something depreciating. They want to hold something that holds value and maybe even goes up. And gold fits that bill. And some of the other perfect storm is lots of other countries, they want to get away from being dependent on the US dollar because they now think it's unreliable, can't be counted on. So how do you get away from the dollar? You buy somebody else's currency. Most other people are printing lots of money. You can buy Bitcoin, or you can buy something real that man has trusted for thousands of years. You can buy gold, maybe even silver. And in today's market, tin and copper. So I can give you a few more reasons, but there's lots of reasons happening that weren't evident even 2 years ago, let alone 3 or 4.
So is this rally influencing currency movements? And this is particularly in gold exporting countries like South Africa.
Look, without a doubt, South Africa, even though it's greatly reduced the size of its mining industry compared to what it was, it is still very, very dependent on mining, probably even more dependent on mining than before. South Africa was a fairly industrialized country up until about 25 years ago. But the government we've had has been deindustrializing for 20, 25 years, more so every year. So we're more dependent on commodity prices now than we were decades ago. And even though we don't produce as many commodities, it means the ones we produce are more valuable than ever. So we're really dependent on gold. And yeah, the gold price has virtually doubled in a year, so government's going to get more than double taxes because it's a relationship that's not linear. If the gold price doubles, our income taxes the taxes paid by the mines could be up 3 or 4 times. So governments looking at much better financing than they have before. The companies are in much better shape, so they're spending money all over the country. They're hiring more people. It's just sad that we don't have the number of gold mines we had 20, 30 years ago. Back then we had 62 mines instead of 8. Back then we had 550,000 men working on the gold mines instead of 90. But boy, we're still being helped incredibly by this high price. And in platinum too.
And I was literally about to ask you about that, whether this sustained high prices in gold, how that's affecting other commodities like platinum, silver.
It's having a great effect. Would they be going up as much if gold wasn't? Probably not. But the reasons that gold is going up are valid reasons for silver and for PGMs. The world needs all those metals. Investors like those metals, and there's a shortage. You know, they were in balance a couple years ago, 3, 4 years ago, they were all in balance. But now, instead of just the industrial use that absorbed the majority of those metals, now there's an investor demand that wasn't present 3, 4 years ago. And there's a lot more investors on the planet than there are industries. So if your investment demand grows by 2 or 3 times, where are they going to get the money? Where are they going to get those commodities? Well, they're just going to have to bid them up in price. And that's what's happening. This is an open auction in the world. All investors, and that includes central banks, governments, companies, and individuals, they all want these metals now. I don't know where the limit is. I keep thinking we're at the limit, and it just keeps going up more. It's like panic.
And I was literally about to ask you, if it's too late to go in now, if you haven't purchased any sort of gold, is this 5,000 level, the peak? Or can one still go in and invest in the precious metal? Or is this just perhaps short term? Or are we starting to see a signal of perhaps a longer term shift towards precious metals as safe haven assets?
I would call this gambling to go in and buy gold now. It's way above its long-term average. It's 2 standard deviations above it. That is risky territory. So if you're buying now, you're not investing, you're gambling. You're hoping and praying. I would rather find an asset that hasn't moved nearly as much, that still has some correlation to gold. Now, we can say, how about the gold mining companies? There's some gold mining companies out there that haven't moved too much, that can make money at a much lower gold price. So if you invest there and the gold price goes down, they won't fall so much. But I'm very scared. I hate investing when something's run even nearly this much. I'm too conservative for this environment. I'm afraid. I'm very afraid to be investing in silver, gold, and PGMs at these prices.
I literally see you holding your heart in your hand right now, Peter.
I am.
Well, thank you so much. Great insight as we focus on gold and a great sage advice from you as well. Thank you so much, Peter.
My pleasure. Anytime.
Thank you. Bye-bye. That's Peter Major. He's Director of Mining at Modern Corporate Solutions. He says in investing at this high level, he says it's not investing, it's gambling. And his heart just cannot take it.